This is Earnings Preview, a look at companies reporting during the week, along with companies which may have positive or negative earnings surprises. This particular earnings preview is for the week of November 24th through the 28th. And joining me, as always, is Charles Rotblatt, Senior Market Editor at Zacks.com, who puts this compilation together for us here each week. So technically, we are now coming to a lull in between earnings reporting periods. We're kind of nearing the official end of the third quarter season. It's going to be a little bit before the fourth quarter season officially opens up. And we've got a holiday in between that, which is going to maybe make for a lull in the markets. But our earnings going to take center stage here going forward? Is the focus, is that going to be a main driver here, given the fact that we got more financial companies that are having problems, Citigroup being one case in point. You've got the automakers who are looking for a bailout. Their earnings are probably going to get really focused on here for fourth quarter. So are earnings going to be more important now than prior to this financial crisis?
Well, there's a general expectation that estimates are going to be revised down, and certainly if we look at where estimates are for 2009 for the S&P 500 as a whole, we're seeing a wide variance between the most pessimistic and the most optimistic. And certainly there's a lot of analysts that are overshooting what earnings will be in the first quarter, probably the second quarter. When we start looking at the second half of 2009, we really have no visibility. It's anybody's guess as to what those estimates are going to be. But in terms of their importance, one thing investors should really realize is that throughout this year, the estimates have told people, stay away from the financials, stay away from the automakers. We've continuously seen cuts, and it's something I've emphasized before also on these videos, is that we've continuously seen cuts for both the financials and the automakers, not just for 2008, but for 2009. We've seen the same thing with the home builders. And where people see estimates being severely cut continuously, that's a big red flag to stay out of it. We're looking now at Citigroup struggling to stay above $5 per share, and a lot of people have lost a lot of money. But the reality is, over a year ago, had you looked at what was going on with Citigroup, you would have seen a big warning sign to get out of the stock, stay out of it. And while everyone likes to think in terms of earnings estimates of how can I make money, they're equally important. They play an equally important role in terms of how do you preserve your capital, how do you prevent from taking on the big mistakes. Not flawless. Analysts don't have a magic crystal ball. Sometimes they'll raise estimates and the company will warn. That's just part of investing. But by and large, people need to pay attention to them. And especially in this environment, we will see more companies than not with falling estimates. And it's really, are we seeing estimates trim maybe by 1 or 2%? Are we seeing wholesale cuts that have continued for an extended period of time? And those are really the situations you truly want to avoid.
So going forward here, at least for between now and the end of the year, with all the industries that are coming under fire, earnings are going to be a pretty big hinge pin in the performance of the market.
Yeah, and I think it's really what the expectation for earnings are going to be next year. And right now, people are pretty much under the assumption that earnings aren't going to be good. And so they're taking a look at all the economic data that's coming out there, and they're putting it to that forecast. And that's why you're seeing stock prices going down, because people are very worried about what earnings are going to look like for 2009. That affects how they value the stock. And as a result, when you have uncertainty, you have questionable valuations, as we do now. Not that they're high, but people don't know where to peg the P/E ratio at. It causes a lot of people concern and gives them reason to maybe move to the sideline or even go short.
What's left to report in this earnings season?
Well, really, earnings season's wrapping up. The last big company we'll have is Hewlett-Packard. They report Monday, November 24th, after the close. Interesting report because they came out last week, and actually pre-announced earnings. And the pre-announcement was pretty good. Even factoring in revisions, they're about a penny above expectations. Prior to the revisions, they're about 3 or 4 cents above what the then consensus estimate was. However, if we look at fiscal 2009, HP runs on a non-calendar fiscal year. I believe they're reporting for the October quarter. So if we look at estimates for the year ending October 2009, we've seen 6 analysts cut their forecast within the past week. This is after HP gave their guidance. And what's interesting is that the consensus estimate is now a little bit below what HP forecasted. So we have a little bit of uncertainty as to why the analysts are doing it. There could be some adjustments in what an analyst actually considers non-GAAP and what he's actually putting in the number, because it really is a number that's not truly accounting-based. They're making adjustments to the accounting-based number. But if you're an investor or a trader specifically and you're looking to play off HP's numbers, maybe hoping they get a positive reaction as Dell just did, I think you need to be cautious. There's definitely some concern about what HP's future is going to look like over the next 4 quarters. And it should be interesting to hear what they have to say on their conference call and how the markets actually react to that conference call come Tuesday morning, November 25th.
Well, it's a holiday-shortened trading week because of the Thanksgiving holiday and an early close in the markets on the Friday after, but yet you're looking for volatility in trading this week. Why?
Well, part of it, a lot of people, I think, on Monday, Tuesday are going to try and position their portfolios really to try and move to the sidelines, not do much. But when you look at Wednesday, we're looking at a lot of economic data coming out, and that's really because Thursday's a holiday, Friday's a shortened day, so we're seeing all the economic data that might have been spread out over the past 3 days really compressed into that one single day. Plus, as everybody knows, it's the biggest travel day of the year, so you're going to see lighter volume. And anytime you have a lot of news on a lighter volume day, it creates larger swings in the markets. So, and I think with Wednesday, we'll probably see an early rush of trading in the early hours and really see it taper off. And it's not only because of traders leaving the floors early, it's really people, maybe at home getting some early trades in before they head for the airport or maybe before they head on the road. And so I do expect some volatility. Friday, we'll probably see some day traders push stocks around. It's a shortened day. I wouldn't read much of anything into Friday's actions. And that's why I say in our piece, I think if you're an individual investor and you're looking at this week, other than proactively managing your portfolio, I wouldn't really plan on making any big moves or big position changes this week. Take the time, spend it with your friends, spend it with your family. Knock on wood, nothing major should happen over those 7 days, and then we'll get back to it once December starts.
All right. Do you own any of the stocks that you mentioned here?
No, I do not.
All right. Well, you can take a look at the text version of the earnings preview for this most current week by linking to it off of our homepage at Zacks.com. Just go to Zacks.com, scroll down the homepage until you see Charles' picture. Don't let it scare you. It's just a picture. And then the headline that accompanies it, and you click on that link, it'll take you right to it. In it, he talks about companies that may have positive earnings news out, as well as companies that may surprise negatively to the downside. With Charles Rotblatt, I'm Terry Ruffalo.